investors brace up for today's T-bills auction, where a total of 800 billion naira will be on offer. On the bond side, the DMO released the bond circular for March, which shows that the government is set to borrow 300 billion naira across the 5-year and 9-year reopening papers. Kinskin Ukeje, a Treasury Team Member at Access Bank, joins me now for market movements today. Thank you so much for your time today, Kinskin, and let's get to the T-bills auction today. Your expectations, and do you think it will more or less follow the trends we've seen with similar auctions?
Okay, thank you, Ken, for having me. On the T-bills auction, the DMO will be offering 800 billion across the standard maturity. Our expectation is that the long-dated maturity would have an inch up in rate, let's say about 19.2% on discount rate on that 3 to 4-day maturity.
Okay, Kinskin, the central bank's auction rates, discount rate have actually been inconsistent. We've seen until last 2 weeks when the rates began to go up again, we saw a decline in rates. What's the confidence that we have that rates will continue to go up this week? I mean, today, last auction was about 18%. Prior to that, it was about 17.8 or 9%. So, what do you think is driving the direction of discount rate that is being offered by the central bank?
All right, thank you very much. What we've seen is that there's a correlation between the sales in the T-bill space with the rates of the FX. And what we've seen, the T-bill space trend on a bearish note in recent times as FPIs are selling funds in order to gain naira to repatriate on their capital space. So this is giving the decline in yields they've seen on the T-bill space. However, if you switch that and increase their yields, we could stem the rate at which they are exiting the Nigerian T-bills market, the money market space.
All right, Kinskin, for me, I'm curious to know about the outlook for liquidity. We're seeing it's not so great right now. Is there any upside in the near term?
Yeah, there are upsides in the near term. Today we have coupon hitting the system about 240 billion coupon that will be hitting the system on the 23rd. We also have a maturity of 562 billion hitting the system. Also next week we also have other maturities and coupon coming into the system. So there will be, I do think there will be a reversal in the trend of 1.4 trillion repo which we have in the system currently. We should see an improvement in that liquidity strength.
Okay, Kinskin, that takes us to the FX situation. We've seen rates come down drastically, significantly towards the end of last month, and began to inch up again. Do you think the use of discount rate, like you mentioned, would be sufficient to help stabilize the exchange rate? We've seen naira depreciate in the past 2 weeks, and CBN supply in the market also decline.
Yeah, I do think the FPIs are also looking at the income on their carry trade. They have to see more justification for keeping their funds in the system. So I do think that could stem the rate at which an improved yield on treasury bills could stem the rate at which they exit the market. Also, we've seen the CBN also show their strength in the market in the last week and this week by continuously showing strong supply in the market. This is to quell the demand pressures we've seen in the FX market of late. So we've just been seeing the rates hover around the 1540 and 1500 marks.
All right, thank you so much for your time today, Kinskin. Interesting times in the market. We'll hopefully hope to see that upside in the market next week. I'm speaking with Kinskin Ukeje, the Treasury Team Member at Access Bank.